Hello and welcome. Today, we're diving into a really powerful strategy for UK business owners, and that's how to use a holding company to build a genuine fortress around your hard-earned assets. And listen, with some big new transparency rules coming in 2026, getting your head around this has never, ever been more important.
So let me ask you a question, and it's one that probably keeps a lot of entrepreneurs up at night. Could one bad contract, just one unlucky break, wipe out everything you've spent years building? You've got cash in the bank, maybe some valuable intellectual property, but is it all sitting in one basket totally exposed?
To really get to the bottom of this, and to make sure we're giving you the absolute best information, this whole discussion has been put together with the experts at Pro Tax Accountant. They specialize in structuring UK businesses to protect them and help them grow. So their insights are basically the bedrock of everything we're about to cover.
Okay, so to really grasp the solution, we first need to shine a big, bright light on a hidden risk. It's something that loads of successful businesses are exposed to, and honestly, most of them don't even realize it.
Let's make this real. Let's talk about Aisha. She's a fantastic app developer based in London, and her company, Aisha Tech Ltd, is absolutely flying. Now, like a lot of business owners, she runs everything through that one single company. Her amazing app, the IP, it's in there. The healthy cash reserve she's building up, in there too. And of course, all the day-to-day contracts and operations, it's all in the same pot.
And when you look at it like this, you can see the problem straight away, can't you? All of her crown jewels, the app itself, £250,000 in cash, they're all legally mixed in with the messy, risky stuff like contracts, staff, and any potential liabilities.
And that's the ticking time bomb right there. What happens if a client decides to sue her for a breach of contract? Or what if the business hits a really tough spot and faces insolvency? Well, suddenly, any creditors can go after all the assets in Aisha Tech Ltd. The cash she saved so carefully, the apps she poured her heart and soul into, it's all completely exposed. One bad turn of events could bring the whole thing down.
So how on earth do you stop that from happening? Well, you build a fortress. And in the world of business, that fortress is called a holding company. Now, this isn't about hiding anything, not at all. This is about being smart and using a completely legitimate way to protect yourself.
The whole strategy, the magic of it, hinges on this one core idea in UK company law. It's called separate legal personality. It sounds complicated, but it's not. All it means is that a company is its own legal person, totally distinct from its owners. And we're going to use that very principle to build our protective wall.
So piece one of the puzzle is the holding company. Just think of this as the secure vault. It doesn't talk to customers, it doesn't do deals, it takes on zero risk. Its only job, its entire purpose is to own and protect the group's most valuable assets. It just sits there, safe and sound.
And then you have piece number two, the operating company. This is the subsidiary, the company out on the front lines, in the thick of it. This is the business that deals with customers, employs staff, and takes on all the normal, everyday commercial risks. This is where the action happens.
All right, let's see how these two pieces fit together to create that protective shield for your business. The idea is actually pretty simple, but the impact, well, it's huge.
Okay, check out this transformation. On the left, you've got the before picture. Aisha's one company, juggling everything, high risk. But on the right, look at the after. Now she has a group. Aisha Holdings Ltd is the parent, sitting safely at the top, holding the valuable app and the cash. And underneath, Aisha Tech Limited is the subsidiary, carrying on with business as usual, dealing with all the risk. Now here's the crucial bit. If the operating company down below gets into trouble, the assets in the holding company are ring-fenced. They're protected. That financial firewall is now in place.
Now this might sound super complex, but it's a pretty standard legal process. Step 1, you register a new holding company. Step 2, you do what's called a share-for-share exchange, where you basically swap your shares in the original company for new ones in the holding company. Simple. Step 3, you move the valuable assets like cash or IP up into the holding company. And finally, step 4, the holding company just licenses those assets back down to the operating company so it can keep doing business. It's neat, tidy, and very effective.
And here's a quick pro tip for you. This isn't just for tech companies with apps. A holding company is perfect for protecting all sorts of valuable assets. We're talking commercial property or land, big cash reserves, investment portfolios, even shares you own in other businesses or really expensive equipment. Basically, if it's valuable and you want to keep it safe from business risks, it's a prime candidate.
Right. Now, this next part is absolutely critical. It's so important to understand that this is a proper, legitimate corporate structure. It's not some shady loophole to exploit, and the UK government is making that clearer than ever. So stay with me, because what's coming in 2026 might surprise you.
There is a new piece of legislation called the Economic Crime and Corporate Transparency Act, and it has given Companies House some serious new powers. Now, it's not designed to stop legitimate structures like the one we're talking about. It's all about cracking down on crooks and preventing abuse. What it means for honest business owners is that you just have to do things by the book, because the old days of a passive, just trust us system are well and truly over.
And these new powers, they have real teeth. Just look at this. In the year to March 2025, Companies House rejected more than 10,000 suspicious applications for new companies. That just goes to show they are now actively looking at who is setting up companies and why. So the bottom line is this. By 2026, the whole system is going to be much more robust. We're talking about much stronger ID checks for all directors. You'll have to officially declare a lawful purpose for your company, and Companies House will have way more power to challenge and remove dodgy information. This just hammers home the point that setting up a holding company structure has to be done correctly, transparently, and ideally with expert guidance. But hang on a second, because here's the bit that a lot of people miss. A holding company isn't just a defensive shield. It's actually a really powerful platform for growth. It can unlock some amazing strategic advantages for your business down the line.
Of course, asset protection is the #1 reason. It's a huge benefit. But look at the other advantages here. A clean, well-organized group structure is way more attractive to potential investors. It also gives you incredible flexibility for growth. You can add new business lines or even buy other companies as new subsidiaries, all without disturbing the core assets you've got protected at the top.
And here's another pro tip on exactly that point. Let's go back to Aisha. Imagine she decides to launch a second, completely different app. She can set that up in a brand new, separate subsidiary under the holding company. A few years later, if she gets a great offer and wants to sell that second business, she can just sell the shares in that one subsidiary. It's a clean, simple exit. Her holding company and her original main app business are totally unaffected. It's brilliant.
Okay, so we've looked at the hidden risks, we've walked through the solution, and we've even touched on the strategic benefits. So what's the next logical step, if this sounds like something that could be right for your business? Well, first, a really quick but important disclaimer. The information we've talked about today is for general guidance only. You shouldn't rely on it by itself to make financial decisions because every single business is unique.
So before you make any decisions, you absolutely must consult the experts. To build your own financial fortress the right way, the team at ProTax Accountant are the people to talk to. They can look at your specific situation, help you navigate all the tax implications, and make sure your structure is rock solid and fully compliant with all those new 2026 rules. Their details are on the screen for you now. So I'll leave you with this question. Is your business structured to survive a crisis, or is it a house of cards just waiting to fall?